Hello, I'm Jessica Amir for the Finance News Network. Joining me from Ingenia Communities Group is CEO and Managing Director Simon Owen to discuss their full year 2017 results. Simon, welcome back.
Lovely to be here.
Thanks, Simon. So to kick off with, you've just announced your full year 2017 results. What were some of the highlights?
Yeah, our EBIT, earnings before interest and tax, was $32.1 million, which was above market consensus. Our operating cash flow was $30 million, which was up very strongly on the prior year. We settled 211 new homes, which was a record for the group, and up around 97% on the prior year. And our statutory profit after tax was $26.4 million. That was impacted by a loss on sale as we divested a non-core part of the business, but that was up just under 9%, so all up a very strong year.
Very good, Simon. And what was the final and total distribution for the year?
Our final distribution was 5.1 cents for the year, and that took the total distribution to 10.2 cents, and that's in total up 9.7% on the prior year.
Thanks, Simon. Now to your portfolio, starting with Lifestyle Communities. Can you tell us how many properties have you got on the portfolio? Yeah,
Ingenia now owns 35 lifestyle and holiday communities across Queensland, New South Wales and Victoria. Over the last 12 months, we've really concentrated on key capital city and metro locations, and it's great to say that we now own some of the most iconic parks on the east coast of Australia.
Brilliant. And how many have you settled over the past 12 months?
In the last 12 months, we've settled 8 new properties. We've bought the largest single holiday park in Australia, Cairns Coconut, which was a $50 million deal. We bought the last institutional grade community in Western Sydney out at Vineyard, which was Avena. We acquired our first Greenfields project just north of Newcastle, which was Latitude 1, and we also acquired 2 parks up in Brisbane, in metropolitan Brisbane. So yeah, we're really excited about those additions to the portfolio.
And Simon, how many properties are in development?
At the moment we have 12 properties in development, and over the next 14 months we're going to either launch or expand another 8 communities. So it's fair to say we're one of the fastest growing lifestyle operators in Australia at the moment.
So in regards to your holiday parks, how are they performing?
Yeah, look, our holiday parks are performing very well. 2 key markets, grey nomads. So a lot of Australians are now retiring. The first thing they do is buy a caravan and they're going up and down the coast, so we're catering to that market. And then the second market, which is probably closer to my heart, is young families with kids. So my 3 boys, they love going with me out to see holiday parks. Both of those markets are going very well, and we're seeing lots of opportunities to invest and extract great returns from that development.
So Simon, now to your seniors rental business, Garden Villages. What are the occupancy levels and how's the business tracking?
So Garden Villages closed out the year at a record all-time occupancy of 92.8%. The EBIT contribution from that business was $11.6 million, which is up 5%. So Garden Villages remains a small but very much core part of our business.
Thanks for that, Simon. So you've just hit a record level of acquisitions.
Yep.
Can you tell us about the demand for affordable housing and what makes your Ingenia Community Lifestyle properties so attractive?
Yeah, I mean, it's a great question. I think about 4 years ago we identified that the fastest growing but least competitive part of the seniors housing market was actually affordable seniors housing. So we've really reshaped our business to target that market, and there's 2 communities that we have that meet the affordability challenge that we have in Australia at the moment. In our lifestyle communities, we're typically targeting a new home price that's around 60% of the prevailing median house price in the market that we're operating. This means that a senior, and actually 82% of seniors own their home outright, means a senior can sell their home, they can put $200,000 or $300,000 in the bank to fund a more comfortable retirement. They can preserve their pension, and by renting the land from us, they can actually get about $60 a week from the government through the Commonwealth Rent Assistance. So, yeah, and what we're really finding is that our highly transparent model with no exit fees, no stamp duty, and where seniors get to keep all of the capital gain is really resonating with the boomer market coming through. And there is about 1,000 people retiring every day in Australia at the moment, so we're finding the depth of market is very strong. The other thing that we've really done over the last 12 months is that we've reshaped our portfolio to focus on capital cities and key metro markets. So our preferred target markets at the moment are obviously Sydney, Brisbane and Melbourne, but also coastal New South Wales. We're finding a lot of people want to retire up to Newcastle or even further up onto the mid-north coast where they've typically holidayed all of their life.
Thanks, Simon. Last question now. What's your guidance for FY18?
Yeah, we're forecasting another strong year of growth. In terms of EBIT, we're targeting between $42 and $46 million, and that's based on home settlements of between 260 and 280 new homes.
Wonderful. Well, Simon, Owen, thank you so much for the update.
Lovely to be here. Thank you.